It's hard to breathe, but that's alright. Hush.
Now moving on to applying supply and demand onto market structure, I'm going to show you obviously the pitch pivot example before jumping onto a real life example. So if we just look at this here, okay, so what we see here is that we, again, as we learned in the last video, is that we're moving to the overall upside, right? Price is creating higher highs and higher lows, but if we look at the pullbacks, we can see what it is creating, what would be a supply zone. Okay, there's different types of supply and demand zones, which is what we'll jump onto later down, of course, and what we can also see within this pullback is what price created what is called the demand zone. And the demand zone is pretty much what is respected, especially during an uptrend, right? Which is what creates a supply zone failure, which then creates another higher high or also another supply zone. And then what happens from there is when price retraces or pulls back, we don't just create another demand zone, but we also tap into the previous demand zone, also known as a previous higher low. And as long as we're staying above the previous higher low, and don't break structure to the downside, price is still in an uptrend. Okay. Anyways, going back to what we were just saying, talking about with the price happening to our demand zone. If price respects the demand zone, we should see that we should see price then continue higher to create another higher high, also known as a supply zone, before repeating itself and creating another demand zone, tapping into the previous demand zone and continuing bullish. When we move on to the real life example, right, we can see that price has created the supply zone, followed by demand zone creation, followed by a structure break, also known as a supply zone failure, and then again repeating itself by tapping into the previous demand zone before continuing higher and repeating the same process until again price either gets exhausted, etc. Right? And then a change in trend. Another thing to notice as well, when we relate back to the last video when we spoken about the minor structure breaks and complex pullbacks in the supply and demand world of terminology, world of trading, whatever, right? Price is just creating minor supply and demand zones and failing, in which we know is just essentially noise and structure breaks, right? However, within the complex pullbacks, we could see a supply zone be respected, and this is why I said in the last video it's okay to counter trend trade, but for the better returns and higher probability, it's better to be within accordance to the trend. Okay. So we just jump onto this and again clear all this, and we speak about this one. Okay. So moving on to a downtrend or again a bearish structure, what we would see here is price created a demand zone followed by a pullback to the upside, creating a supply zone which is followed by a reversal to the downside, breaking the demand zone and creating a new demand zone. And that is just called demand zone failure. Right? Then again price repeats itself, pulling back to the upside, essentially creating a supply zone, also known as a lower high, whilst tapping into the previous supply zone, respecting it, and then followed by a demand zone failure, causing a new demand zone, and so on and so forth. Now I'll jump onto more real life examples in a minute, but it's just essential that you understand and try and listen to what I'm saying. Alright, if we move on again and take a look at the real life example, right, we can pretty much just see here, it's the same as the non-materialistic example. However, as we discussed in the bullish structure example, we can see that we are seeing the complex pullbacks to the upside, creating minor supply and demand zones and failing, which we know is just essentially noise. However, within the complex pullbacks, we could see a demand zone be respected, but again, I would prefer to personally not take them trades, as I prefer to take the sell trades rather than the buy trades within a bearish trend, right? So all in all, a quick thing to note as well is that in a bearish trend, our supply zones are being respected, whereas our demand zones are continuously failing, which is also the explanation of our lower lows. And because our supply zones are being continuously respected, that is the explanation of our lower highs. So with that pretty much all being said, by now you should have a better understanding of supply and demand and market structure. But obviously I'll jump on to refine the supply and demand zones and actually how to find an entry using other stuff that we use as well, so order blocks. But for now, what I want you guys to do as well after this video is go on to the charts and start marking up these swing points and mapping out your supply and demand zones. You don't need to know where how to mark the supply and demand zones, but just look at it and mark every swing high and see how far the price is retracing back into that previous highs or lows. Okay. Also map out your supply and demand zones again, just mark out the swing highs and lows and start noticing just the difference between the complex pullback and the pivot point. right? By pivot point, I just simply mean the highs and the lows in which price reverses from, then breaks and breaks above or below a previous high or low, depending on the trend. But yeah, good luck, guys, putting them on. I obviously will jump onto the example in a minute, on a real life example. But again, if you are marking up the charts, good luck, and make sure you send it into the Discord as well. So let me see you guys putting the work, pretty much. So now it's time for the charts, the moment you've all been waiting for. We just go to the day time frame. I did have one ready, if I can find it. There we go. So, oops, if I just quickly come up here as well, just for a minute, and show you guys pretty much more of what I was saying, because obviously I was explaining it then, but I'm going to show you the real examples now. Now what we see here, guys, is we must understand that this here is a high, this here is a low, right? What happens is then price, you could class this as a breakout of structure if you wanted to, and form that as a high, and this is your low. It makes sense because it's above the previous high. Again, this counts as well. This counts as well. And then we don't create a new high. We fail to make a new high. Oops. We fail to make a new high. And what price does, it pulls back all down to this demand zone, so the swing points. Now when I say demand zones, it could just be mapping out order blocks, or it could just be mapping out whatever, right? Which is what we jump onto in a different video. I'll actually show you how to map them out. I'll show you a bit in this video as well. But pretty much what price is doing here, say for example there's an order block, right? And this is what you will see on a price chart. There's an order block here. Again, like I said, if you don't understand what it is, don't worry, I'll explain it later. So say for example there's an order block here, right? And we know we focus on the swing point. So even though price has created a high and a low and a high and a low, and it's broken structure, all it's doing is tapping into a demand zone, because again we're focused on the extreme points. Okay, and it's the exact same if I just flip this around. It's exactly the same for when price moves to the downside. Broken structure, you know, you've got these sort of minor structure breaks and minor noises, and then what price does is it taps into this area. What might happen as well, pretty much what I'm saying is it's a complex pullback, right? And this will confuse a lot of people. Alright, so there's different types of where you can view supply and demands. So this here is an example of compression into our supply zone. I'll jump obviously on that in a different video. But as you can see here, price is creating highs and lows, overall move to the downside, and it starts creating this short-term bullish, you know, structure, or what looks like compression. Now there's many ways to, you know, approach it differently as well. If price was very, very bearish and had one big bullish, you know, bullish candle that took out all the previous bearish candles, then that will probably obviously be invalid, because the momentum in this move right here, in the current move, is obviously bullish, so that would be invalid. But if when it's moving like this, making highs and lows and structure breaks, this is just pretty much accumulating orders with the institutions as well, and I'll jump onto that as well. There's so many things to cover, but pretty much it's compressing into the supply zone, so price is getting thinner and thinner and thinner, and then we eventually see the breakout. And obviously we look to mitigate it, whether it's the equilibrium or the open, we look to mitigate it. Right, so obviously if that didn't make much sense, don't worry, don't stress about it, because there is more. I'll go obviously more into different examples. But if we just look here, right, I want to explain this. Okay, as you can see, I mapped out all the supply zones, so the ranges and the order blocks and the pivot points. Right, so as you can see, all the supply zones. If we just look at the supply zones, we can see here that they're overall being respective. Right, and what we're seeing here is actually a very nice example. If we just look at this right here, we can see that this is the most extreme point, right? We've broken structure, blah, 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 right? And this is classed as a supply zone. So we know that price could potentially tap into this before moving to the downside further. Okay, and again, it's the most extreme point, so a low high. So if price was going to continue bullish, it would be in the bullish structure. But right now, it's not, because we're in bearish structure, right? Because the overall downwards, the overall move is to the downside, and again, we haven't broken above the previous lower highs. Okay, so as you can see, all of this here is just sort of complex pullbacks, so it's just minor structure breaks. You can even include these as well if you really wanted to. Right, you can really do that if you wanted to. That's fine. But everything that you're seeing in here is all just noise, right? And it's just ranging to the sideways. It's just sideways movement. You know, prices breaking structure. So everyone's going to be a lot, you know, very confused. But when price is just ranging, I'd rather not be in a, you know, in the range. I would rather be above the range, right? The reason why I say above the range, I would be below the range if it is in the bullish market, but because we're in a bearish market and price is ranging, this means that it's just accumulating orders within the institutions, and then price will eventually tap into, this order block here or supply zone. And essentially what it's doing is, when it's accumulating orders and price moves sideways, you've got all these retail people who are trading, sells, and this is just all sort of equal highs, sort of just ranging within this bigger range, right? And then what price does, it eventually pulls back to this big order block or supply zone here, and then continues bearish. Okay, but if we just focus on how many supply zones have been respected compared to demand zone failures, we can see here we've got Hawaii. I'll jump into the maths in a minute, but I've mapped out all the supply zones. You can take a good look and you can probably guess that already the supply zones are being respected more than demand zones, because if you look at the demand zones, it taps into it, short-term retracement break structure, right? Taps into it, short-term retracement break structure. Taps into it, short-term retracement bear structure, right? And this is what you will see on the charts every single day. You'll see price up into a demand zone, short-term structure, short-term reaction, and then bear structure. But again, we wouldn't look for buys within a bearish trend because we know price moving to the downside. However, like I said, I can't tell you what to do, and if you're trading counter trend trades, that's absolutely fine. Because if you want to take a trade from the demand zone, that's fine. Because all you could do is just target the order block or the new supply zone within that move that creates the downside that tapped into the demand zone. So it's just about scalping, right? Because a lot of people, I find that they're looking for buys here, and they call it's gone crazy. They call themselves smart money traders, right? A lot of people, and I'm not slating anyone. It's just a lot of people do this. So what they'll do is they trade smart money. They understand all the blocks, they understand everything, but they don't understand structure. So what they'll do is they'll have their take profit all the way up to this high, whatever, right? And it's like, why are you doing that? Because look at what price is doing. It's moving to the downside. Look at the demand zones. They're not being respected. And this is because people don't really actually understand supply and demand zone when they apply it with market structure. Okay? So as you can see, focus on most extreme points. This is why it's good to be the overall trend. Not always will it mitigate pullback. So you must understand that not always will it pull back. Okay, so as you can see here, this is a valid supply zone. What happened? It didn't even pull back. But it broke a structure and it's created a new range. But once it's in that new range, we created a new supply zone. It didn't pull back. Again, broken structure below the previous low. Created new supply zone. What happened? It tapped into it. Nice. We could have took a sell there. What happened? Created new supply zone. Sort of. Well, I suppose you could probably on small time frame break structure, but that actually isn't that valid because it didn't break structure. And the reason why it's important to map out these lows and highs because it will help you decide your supply and demand zones. Because like I said here, it's not broken structure. So would we map out this or not? And the answer is no. We wouldn't map out this because it didn't break structure. Because in order for there to be a valid supply and demand zone, there needs to be a break of structure above or below it. Like I said, don't worry about all of that. We'll jump straight into a different video later on down the line. But you must understand that when price created the supply zone here, it wasn't a valid supply zone really because it didn't break below the previous structure low. Okay, so that's why it's important to just, even if you look at the market and you understand the highs and lows, make sure you map out the highs and lows. Like make sure you put this circle on here, right? Because it will help you decide, help you decide which supply zone to target, right? And it'll help invalidate a lot of supply and demand zones because we're focused on the extreme points, right? We're not focusing an order block here, right? We're not looking to sell here. We want the most extreme point in price, okay? So again, demand zones are being violated, not respected. So as you can see, even though price tapping into it, sometimes we'll get a reaction like we did here, but the overall move is to the downside, right? So I'd much rather take this sell position here than this buy position here, okay? But as you can see, this is a tricky one as well because this is still classed as a lower low because this wick here, it will be filled on a smaller time frame. So this here is a class as a a most extreme swing point. So everything within this range is what we could just jump into and just try and take those nice trades, supply and demand zones, right? Because it's still within this range. So if we look at the maths of it as well, if we just jump into that, if I just move this back. So we drew on 12 demand zones. So every blue one is the demand zone. We drew on 12 of them, right? Probably wrong, but we drew on 12 of them. And out of those 12 demand zones, 0 was respected logically. Because not once did it respect it and continue higher and higher and higher. Right, it respected it short term. Yeah, don't get me wrong, you could have got some nice trades there, but logically speaking, it didn't respect any of them. It tapped into it and violated it straight away, most likely. Right. However, we drew on 15 supply zones. Out of those 15 supply zones, 7 was respected. right? So that means pretty much when I say respected, the price tapped into it nicely and continued the desired trend. But we would obviously not draw on all these 15 supply zones. You must understand that, because we could draw on at least only, counting here, 4 supply zones after factoring in confluences and stuff to look out for, in which 3 of them was respected. So logically speaking, if we were going to draw every supply zone logically, in accordance to our let's say confluences, so for example, even adding on the Fibonacci tool, it would help invalidate a lot of POIs. Because if we're looking for a sell here, if we draw on a swing point, I'll jump onto this in a different video, but if you understand it already, you'll understand that when we focus on factoring on our confluences, we want to sell within a premium zone. So we would not take a sell, we would not draw this sell zone here because it's not within a premium zone. But yeah, logically speaking, we would not draw on a whole 15 supply zones. I mean, you can if you wanted to, but we wouldn't take every single trade. It's up to you. But after factoring again confluences, there was only 4 of them that would actually be valid, and 3 of them was respected. But yeah, that's pretty much what I mean when it comes to supply and demand and market structure. Like I said, it's still the basics. I will jump onto supply and demand and explain what it means. So for example, when supply and demand meets, it's fair value, blah blah. I'll explain all of that in terms of market structure in more in depth and sort of phases of the market video. But for now, just understand that supply and demand, I'm trying to get the more of these videos in the market structure section is just getting a point across that be within accordance to the trend, and it's not just looking at it and saying okay, price moving to down, so look for sells. It's actually marking up the highs and lows and which ones are valid and which not. Okay, so yeah, with that being said, guys, I'm going to end the video here and I'll jump onto a separate video. Hey guys, so I forgot to mention something. You may be wondering, if price did not tap into a supply zone, how do we get over that fear and what should we do? And this is why it's important to understand the ranges. So when it comes to understanding the ranges, it will help us to adapt to new market changes. So for example, here, right? This here is a valid supply zone, or what we would call a point of interest. But because it broke in structure, here and here and here, and it broke and took out new structures, we sort of entered a new range, right? So as you can see, price broken structure here. So we're now in this new range. But pretty much, because we've entered a new range, we have now invalidated the previous supply zone and created a new one, right? So for that reason, when price isn't fully pulled back to a point of interest and then continues to take out a structural swing point, depending on the trend, it invalidate that point of interest, because we simply again enter a new range and we look to mitigate that new swing point supply or demand zone. In this case, it will be a new supply zone because the price is bearish, so we want to only be preferably looking for sells. And I think I may have forgotten to mention this, but all these structural breaks that you see within price, so here, not there, but here, blah blah, this is all just substructure or a complex pullback. But remember, we don't care about all of the complex pullbacks, all the substructure, because it's just noise. We would only care about if price actually broken a structure above an extreme swing point or supply zone. So for example, here, so price broken above it, then obviously that would invalidate and would obviously be in a new, sort of potential bullish trend. Okay. But yeah, I hope I covered everything, guys. Like I said, there's much more explanations for this. It'll all start to connect if you just listen up and take in information and understand the ranges and understand supply and demand zones are at the most extreme point in price. Then yeah, we'll obviously dissect and cover, how to draw them on, what makes this a supply zone, what makes this not a supply zone, blah blah. So we'll always cover that on in a different video. Okay. So I think I've covered everything, but I just wanted to show you how to actually apply supply and demand into market structure and get the point across about choosing a specific supply demand zone, right?